Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Stocks closed mixed Monday, but the NASDAQ hits an all-time high on a tech boost and on the multi-year deal between chipmaker AMD and OpenAI. Investors remain optimistic about the build-out of the AI ecosystem. Free markets are for everyone, and according to a new report, retail trading continues to be on the upswing with record activity. We're taking a look at what investors are buying, selling, and researching and what that info means. And 'tis the season to spend. We're talking with a retail expert on whether Americans are opening up their wallets this holiday season, plus a look at recent retail spending trends. Well, retail traders are still leaning in as confidence builds across the market. Charles Schwab's latest stacks report shows trading activity hitting a 6-month high in September, with investors adding exposure to names like Nvidia, Oracle, and even crypto-adjacent stocks. For more, we're going to bring in here Joe Mazzola, head of trading and derivative strategist at Charles Schwab. Joe, it is always good to see you because you have such a good line of sight on how investors are feeling, given all those many Schwab customers, Joe. What's interesting is, if I'm seeing this right, Joe, it sounds like they're adding risk, but also nearly 40% feel bearish here. So am I reading that right? Reconcile that for me.
You know, you got it. That's why we look at the stacks, because that's the behavior side, right? So we have two surveys that we do, or two measures is a better way to put it, that we do on a monthly basis. The one is the behavior report, which is the Schwab Trading Activity Index, which is what you highlighted. And then we also provide a attitudinal survey, if you will. We asked about 1,000 traders, how you feeling right now? And what's interesting, and Josh, this is kind of the wall of worry climbing that we're seeing, is that not only are they adding risk and staying invested in the market, you know, they're switching to more volatile, higher beta names, but yet they're not feeling very comfortable while they're doing it. I think that comes down to a few things. I think there's this belief that the AI trade is maybe a little bit long in the tooth. Valuations are high across the technology, and then there's still concern about what could happen with the trade tariff policy, and then also some of the some of the tumult in Washington.
In terms of sectors, Joe, it's interesting because it looks like they're selling tech broadly, but then they're buying some of these high beta AI names like Nvidia and Palantir and CoreWeave.
Yeah. No, I mean, you got it. I mean, it was one of those things where sell a broad-based index or sell the ETFs as a way to kind of funnel that money into more of a certain, small sliver of stocks. And I think that's what we're kind of seeing. I mean, even if you look at outside of what Schwab clients are doing, just kind of look at the overall S&P 500. On a day like today, we basically were even advanced decliners. And then if you look at market breadth, it's only about 57% of the stocks above the 50-day moving average. So, if you use the analogy of generals and soldiers, it's the generals that are doing the marching right now. And if we want to make sure that we have some type of protection, should there be some unknown catalyst that shakes up the markets a little bit, we need to get those soldiers involved a little bit more. We need to see that breadth widen out.
I'm curious, Joe, since we're talking some AI names here, what do you make of this talk bubbling up of an AI bubble?
What's interesting is just kind of the circular fashion of the financing that's going on. I think it's something that needs to be, you need to be at least aware of that. And this AMD move that we saw today are incredible. I mean, 30% with the market cap the size of AMD, it's a monstrous move. It's unbelievable to see something like that quickly. We saw the same thing with Oracle, and then, that was number 3 on our list of client buys in September. So, the money's moving into small AI adjacent names you mentioned, even if they're kind of the crypto adjacent names as well too. And it just goes to show that the clients are taking on more risk. Now, the other thing I would mention too, Josh, is when I look in the options world, you're starting to see kind of a divergence between what we call like the equity skew, right? So call skew on individual equities. People are really starting to buy calls there. And then versus the index skew, where we're not seeing nearly as much hedging from the institutions that we've seen before. So, there's a lot of one-sided trading going on. I think the thing that still gives me a little bit of comfort in that, or that the rally has some legs to it, is because we see that wall of worry on the attitudinal side.
It's interesting. You mentioned Oracle, Joe, and I saw Oracle and Amazon. Looks like they jumped into the top net buys. Then, though, this is interesting. Tesla and Apple, it looks like they were top net sells. For Tesla and Apple, would you think, is that just folks maybe just booking some profits here, or no, they're losing confidence in some of these names?
Yeah, it's a good question. I think it's probably more of the trimming, because remember, on the sell side, it doesn't necessarily mean that they took the positions zero or that they're short. It just means that they might have trimmed. So I think that's probably the same thing with Baba. Alibaba was on that list on the sell side as well too. They all had pretty big moves. What was interesting to me was that the fact that you finally get Tesla and Apple kind of breaking out of a range, and there was some trimming. I would have thought that there might have been, the traders might have let that go a little bit more, but they did sell. But if you look at like Nvidia or Amazon, I have the ability to kind of see this on a weekly basis, where the net buys were on weeks where there was some pullback. So it's kind of the buy the dip, sell the rip mentality. I just think that there's a little bit less selling on the rip than there's been in the past. Let's
say, Joe, Fed keeps cutting. Let's say volatility remained relatively muted. Where would you think maybe retail money could go next? Which would it be? Tech, financials? What do you think?
Well, I think with if you see a continuing steepening of the yield curve, I think that financials could benefit from that, and we're going to find that out, in a little over a week here when we get that first round of earnings. The other thing I would say, Josh, one of the things that I think might be propelling this rally is if you look at the bond market, the 10-year yield is basically, it pulled back down to around 4%. Now it's around 4.15, but there's been a lot of stability within that. So, if you look at something like the MOVE index, which measures volatility, that's been very well contained. And if that stays contained, then I would believe that equity volatility or the VIX stays contained, which could once again give another leg to this rally.
Joe, always good to see you. Thank you.
Thanks, Josh.
Stick around. Much more Ask for a Trend still to come. The S&P 500, the NASDAQ notching fresh record closes as AMD's OpenAI deal sparking a rally. Yahoo Finance's Jared Blickery joining us now with the trading day takeaways. Jared.
Josh, we got a number of records today. I'm going to start with industrials, and that's because we haven't seen a record in industrials since July 25th. And in fact, this is number 16 of 2025. That might sound like a lot, but it dwarfs in comparison to some other markets. We'll get to those in a second. Here is the year-to-date chart. So basically, it's been trading sideways since July, and now it is breaking to the upside. It's going to take a little bit more confirmation, but just kind of adds to the growing swath of strength and bullishness that we're seeing in the market, because guess what? We also saw record highs from tech. That was in number one spot. That's up 1%, and utilities, which was close behind today.
All right, so that's industrials.
Yes.
What else was notching records?
We got to talk about digital and physical gold, uniting to each notch their own separate records. We've been talking about Bitcoin a lot. I said I like the momentum that Bitcoin had as it's approaching its record high now. And guess what? We were able to finally crack that mark. I would caution Bitcoin famous for its false breaks to the upside and the downside. So this might be a fake out, but I do like the momentum behind it. So odds are in my book that we kind of continue to rally here. If we do get a pullback, I want to see the low 120s hold, and we'll have to see if that comes to fruition there. But according to my stats, we actually have 9 record highs in Bitcoin, and I did mention actual gold, physical gold. So let's dial that up to 1.9% today, 39.83. This is dangerously close to 4,000. That is a huge psychological number. That would be number 42 for gold this year alone. And I actually had a chance to sit down with Michaela Galina. She has her own shop now, and she was on Stocks in Translation just talking about the gold trade. It drops tomorrow morning, but listen to what she had to say right now.
I think there's been a perfect storm in a good way for gold to have a good year. The economic backdrop of geopolitical uncertainty, of central banks around the world accumulating the asset, and being in the inflationary environment that we've been in. More recently, we've seen the Fed have a dovish signal, and we know that they've indicated they're going to cut rates a couple times this year by a small amount, probably 25 basis points, and that is historically a tailwind for precious metals. So we've seen a nice setup for gold.
Love it. And again, that's Tuesday morning, 8:30 a.m. Check that out on the Yahoo Finance site. We got to move on, though.
What about concerns,
yes,
worries in today's trade?
Everybody remembers Yen-mageddon, right? I barely do. It was August of last year, and that was when the yen was kind of in The Japanese economy was in deflation mode for decades, and then we've seen inflation become a thing again. And over the weekend, we had a surprise election, and it looks like there's going to be a new prime minister. I'm not going to get into the details of that, but I just want to chart the US dollar versus the Japanese yen. And you're going to see this higher now. Why is the yen cratering? Because the US dollar is first, but this means a stronger dollar by 2%. That is a huge amount, and we haven't seen the yen really be a factor in a while. Let me put a 2-year chart so we can maybe see when Yen-mageddon was. Maybe it was somewhere in here. I'm just guessing here. Nevertheless, this is a yellow warning flag. Sometimes when the global bond markets get heated up, and this does affect interest rates, it spills over into stocks. Not always for a long period of time, but definitely something to watch and keep on the back burner.
So that's the yen. How about a quick check on the dollar?
Yes, sir.
Yeah.
So the dollar, because of the overnight action in Japan, we actually saw a modestly higher dollar today. It was up as much as like 0.8%. Gave a lot of that back, but if you look at the year-to-date trend, let's just take a look at that. Basically done nothing for several months. So dollar is not too much of a concern for me right now.
All right, thank you, Jared. Appreciate it. Stick around. Much more Ask for a Trend still to come. The holiday shopping season is right around the corner, and all eyes are on the consumer. Adobe's forecasting more than $250 billion in online sales as shoppers continue to hunt for deals. For more, we're bringing in Sucharita Kodali, retail analyst at Forrester Research. Sucharita, good to see you. So let's talk about this holiday shopping season and what we expect. So Adobe, Sucharita, here's what they're forecasting. They're saying $253 billion in online holiday sales, and by their math, Sucharita, that would be up about 5% year over year. Does that generally kind of dovetail with your expectations, Sucharita?
Yeah, we more or less are in the mid-single digits as well. What is really probably the most surprising thing, though, is that online growth has historically been in the double digits. So for a whole slew of players, Adobe's not alone, whether it's Forrester, other forecasters as well are suggesting more toward the single-digit % number, which means that the sector is maturing and we're not going to see the huge numbers that we've seen in the past. Now, overall, retail is in the low single-digit growth level for the holidays. So e-commerce continues to gain a little bit of share, but not at the torrid pace that it had been. So I think that's really the big story as we may be approaching e-com maturity.
Can I ask you, Sucharita, I'm just curious, where would you expect to see the most spend? Which categories? Would it be, electronics or clothing?
Yeah, during the holiday season, those are absolutely the ones that you tend to see the biggest numbers. Like certainly electronics, apparel, accessories are also big. Sometimes in the toy sector these days, all the toys has been much softer than it was maybe a decade or 2 decades ago, but still you will see toys, particularly driven by any type of trend releases. You've probably heard of the La Boo Boo dolls, so that's probably going to be a big seller, particularly for any merchants that are able to procure that inventory. And then you'll also see things like home appliances, items that may be in that $200-300 price point, particularly for families who may be purchasing for other members of their family.
I did hear about those dolls, Sucharita, because I have a 6-year-old. I heard all about it. I'm curious, if you had a relatively strong holiday season, Sucharita, who would you typically expect really benefits from that? Is it sort of the big box players? Is it the relatively smaller online names?
It's an interesting question because you just described the bifurcation in the market. And certainly we have a year right now where there is record low consumer confidence, and there is a lot of uncertainty as to what is going to happen with everything from interest rates to employment rates in 2026. And typically how that backs into consumer spend is that people are a little bit more cautious. A significant part of holiday spending actually is not gifts. It's people purchasing for self. Are people who have delayed transactions and they have delayed purchases because they're waiting for that big deal. sale, maybe with this week's Prime Day, or maybe with Cyber Week later in November and December. And so what you end up with is, yes, it's going to be those mass merchants, companies like Amazon and Walmart, that no doubt will see decent holiday sales. And then you're also going to see some of these smaller emerging players that have mastered search engine marketing, or they have really, really niche products that consumers want to buy. And you do tend to see a little bit of that middle squeezed. So those are certainly the players that I'm looking for.
You mentioned Prime Day, Sucharita. I'm just curious if that's successful. Does that pull forward demand? Does it just sort of expand total spend? How should we think about it?
Yeah, typically what we see is that the rate of holiday sales tends to be the rate of growth of holiday sales tends to be about the same. And in the past, what you may have seen in the month of November just happens to be pulled forward a little bit into the month of October, when you have a holiday as big as Prime Day. And then also you'll see a slew of other players. Target's another one. Usually Walmart will also have some type of a sale offering to be competitive as well. So you'll see a lot of players just also offering something from a shipping or an offer standpoint to try to capture people who may be on the hunt for deals this early in the season. But yeah, so for the last several years, it's really been something that just merely pulls forward a little bit of that holiday demand, and isn't necessarily additive to create a much bigger holiday season than ever before. And you can certainly see that if we're only talking about mid single digit increases in year over year growth. And some of that's going to come in the month of October. I wouldn't be too excited about great sales growth for e-commerce players in November and December.
In terms of how folks are going to be paying for all this, Sucharita, Adobe also has a stat there. It's interesting. They predict an 11% increase in BNPL, buy now, pay later spending. Does that sound about right to you?
That seems like it is a little bit of a number that seemingly is pushed by some of the payment players that really want to be making a case about buy now, pay later. It's essentially an online version of layaway offers and delayed payments. So it is something that has been a lever in e-commerce for 20 years. I'm surprised to see that it is at a double-digit growth rate, because that suggests that it's going to take share from other types of transactions. But typically, that growth only comes if consumers are very stretched, and these buy now, pay later companies are generally very generous with the offers that they're making, with significant deferred billing options. It sort of smells a little bit of the subprime housing boom, but only in e-commerce and online sales now.
Sucharita, great to have you on the show today. Thank you.
Thank you.
Well, that's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.